Hey guys, welcome back to the channel. If you're new, welcome. My name is Shalise. I'm a mother, a wife. I'm a 40-year-old investor. I'm trying to get to financial freedom. I'm not a financial advisor or fiduciary. I am just a regular investor documenting her family's journey to financial freedom on YouTube. So remember, this is our portfolio, our journey. You make sure that you create a strategy that works for you, okay? And beware of scammers and fake pages. So today I wanted to share with like a quick HSA update. I've been getting some questions about this, and I figure, you know what? Let me come on and talk to you about one of my favorite investment vehicles, pretty much of all time. I mean, the benefits of it is amazing. And if you have access to one, I mean, I can't tell you what to do, but definitely take advantage of it if you can. And I even know some people get matches on the HSA. So that's amazing. But first, I wanted to share with you an article that came out on May 2nd through CNBC saying that the IRS just revealed the HSA limits for 2026, which is crazy, right? That's absolutely crazy. If we come down just real quick, HSA stands for Health Savings Account. So it's a great way for individuals to save, another way to save for retirement for their health expenses. I mean, let's be honest, as we all age, we're going to have some type of medical issue, take vitamins, medications, maybe get surgeries, whatever, right? And if you have a family, the great thing is that you can use it on your family as well. I have kids. My sons have had casts on, stitches. I mean, it's just, a part of the course, right? So a lot of people like to use these accounts for medical expenses. It's a great way to invest and grow your money in a different vehicle. So that way, when you do need to, pay a copay or deductible or whatever, you have that option there. So if I come down, oh, actually, if I come up rather, you can see it right here. The contribution limit for 2026 will be $4,400 for individuals and 8,750 for families. So my husband and I, we do have a family plan because we do have 3 kids. So we are able to max out for the family benefit, which is great. And you can see that, like I mentioned, the family coverage will jump, the limit for a family will jump to $8,750 that we can max out for 2026, which is really, really cool. Now, remember, a lot of times for people to even have access to an HSA, you have to have a high deductible plan. So if you don't know if you have one or not, just go down and talk to HR at your job, and they will be able to help you with that, only because only you would know that. It does have 3 amazing triple tax benefits. So again, saving for retirement for your medical expenses is something that a lot of people want to do. But the fact that you can put the money in literally tax free, then the money grows tax free, including your dividends. And then when you withdraw the money to use on, your qualified medical expenses, it's also tax free, which is amazing. Now, there is something called FSAs or flexible savings accounts, I think, or flexible spending accounts, excuse me. I think some of us are familiar with that. Those are not like HSAs where the money can roll over. So in an HSA, you could leave a job and have an old HSA and the money is still yours. With an FSA, if you don't spend it like by the end of that calendar year or something, you lose that money, which is kind of crazy. So it's a very, very powerful tool. I have like a quick image here to help you kind of see it a little bit better. So again, any money you put into your HSA, and again, if you get a match on your HSA, your employer can automatically deduct it for you and put it right into your account. So you don't have to worry about manually doing this, okay? That's how it is with us. So they take out, and you can determine how much you want to put in, but if you can max it out, okay? But again, the money goes in and it's tax free, pre-tax, excuse me. And then you can choose your funds and investments. Now with an HSA, it just depends on what's available through your broker. Some brokers will allow you to invest in whatever you want, like SCHD or VOO. That's not the case for us. With the employer, they have like a certain amount of assets or investments that we can choose from, and we just have to pick one of those. But usually they have an investment that tracks the S&P 500 or the total stock market or something like that. So you can still invest that way. And then of course you can, when you do use it for qualified medical expenses, you can use, it is tax-free, which is great. Another loophole that people like to use is that you can pay for your qualified medical expenses out of pocket. So don't use your HSA, let that money sit there and grow, and you pay for your medical expenses out of pocket. Then anytime in the future, you can take that receipt, let's say from 2020, and you can reimburse yourself from your HSA in 2025 with no penalty. So that's really, really, really awesome. But let me take you to one of our HSAs. So this is just one that I'm going to show you today. This one is an old one. And again, I wanted to bring up an old one because I want you guys to see that you can, it is still yours. You may leave a job, maybe the job switch providers, and now you have two HSA accounts. So you still keep your old HSA account, and this is just a reminder for those of you who may have old 401ks or traditional IRAs. Like, make sure you're still tracking that information, even though you may not be with that current employer, or if it's an old account, you want to make sure you're staying on top of this because this is your money still. So again, we have about 30, let's just say rounds up $31,000 in this particular HSA. Now, but all the HSAs my husband and I have, they do require you to keep a cash balance. So you see, this is just investments. But you see this cash balance is $18.01. In the other HSA we have, the cash balance is $2,000. You just have to keep it there. You have no choice. That's just how the fund manager set it up. And it's a great thing because if you do have medical expenses in real time, you can still use that $2,000 in cash to pay for your co-pays, deductibles, without having to sell your investments inside of your HSA, if that makes sense, okay? So you can see with this old one, not contributing anything since last year, we're not doing bad. I mean, year to date is down, but let's be honest, year to date in many of the other funds like VOO is still down year to date. I think it's still down like 3.5% or so as of the recording of this video, which is May 5th. So that's not bad at all. Again, this gives us the options to buy and sell. We're not doing any of that. This is an old HSA. If I come down to the breakdown of this money, you can see that, again, just for the past year, you can see that it grew a little bit. Again, we had a lot of pullback in 2025. I mean, the market is trying to come back, but year to date, if you look at it, we're still kind of in the red. But again, long term, this will be fine. So you can see of this 31,000, let's just say 57.66% is in this particular growth fund. This is in the American Growth Fund. 28.97% is in the American Balanced Fund. And then 13.38% is in the American Capitals Fund. And then there's nothing really in the, like the interest type or cash portion of this account, like 6 cents. But again, this is an old HSA. We're just leaving it alone. If I scroll down, you can see that we do get charged fees. Let me see if I can bring this up. Internet is a little slow, but it should bring it up. Okay, so you can see that we do get charged fees. If you have any type of fund, it could be a mutual fund, ETF, index fund. Those expense ratios that you see at the bottom, that's the cost you're paying. The fund manager or a broker to be in that fund. So we do pay fees, but I think they're really reasonable. The last dividend we received, I pulled up dividends because you can receive a dividend in your HSA. I have to sneeze. Let me pause the video. Okay, I'm back. So I pulled up just the dividend portion, and you can see that in March of this year, we received a couple of dividend payouts. One for $35.15 that was reinvested, one for $29.29 that was also reinvested, and one for $145.10 that was reinvested. And those are in the three funds that I told you about a few seconds ago. If I come back to December, our HSA pays out the majority of its dividends at the end of every year. So in December, so you can see in December of 2024, we received a huge dividend payout of $1,540 that was reinvested. You see it right there. We received another dividend payout from another fund that we have in this HSA of $145.10. That was also reinvested. And look at this one right here. December 17th, we received $527.80. That was also reinvested as well. So you can receive dividends in your HSA as well. But I wanted to come on and just talk to you a little bit about that the HSA the contributions will increase for 2026. Let me know down below if you guys have an HSA or if you had one in the past. Are you tracking it? How's the performance of it? And do you receive dividends in it? That was a lot of questions, but you can answer one of them, okay? But yeah, that's just a quick update on HSA. I'll leave this article linked down below so that you guys can go and check it out if you like. Again, make sure you like, share, and subscribe. Smash notification bell so that you don't miss an upload every time I post a video. And until next time, y'all already know, I'll see you in the next one. Bye-bye.